A stronger economy has helped deliver a better budget outcome. The budget forecast for 2018-19 is for an underlying deficit of $14.5 billion. It is $6 billion better than the previous estimate, and it will be the smallest deficit since the GFC. The forecasts for the out years have also improved. Indeed, the budget is now expected to be back in the black 1 year earlier in 2019-20. Whether these projections will be achieved depend critically on the key economic assumptions. The wages growth forecasts appear optimistic, so there is some risk Treasury misses its forecasts. The government's bottom line has been boosted by strong tax revenue growth. The jump in revenue has occurred because of a stronger than expected domestic and global economy, which has boosted commodity prices, jobs and company profits. This has resulted in higher tax receipts to the government coffers. The higher revenues flowing to the government have paved the way for tax cuts. The plan to cut personal income taxes took centre stage in this year's budget. The tax cuts should help consumer confidence and spending, but the reform happens over quite a long time. Infrastructure remained an ongoing big part of the budget. Spending on infrastructure helps support economic activity and jobs growth.
There was great news for consumers in the budget with personal income tax cuts. These target lower to middle income earners over the next 4 years. The issue of bracket creep will be addressed by raising the thresholds for some of the tax brackets over time. The budget increases the $87,000 income tax threshold to $90,000 from July this year. Further tax changes will be phased in over a period of time, with higher income earners sharing some of the benefit from tax changes out to 2024-25. As much of this reform is not occurring for some years, the cost to the government will be in much later years when forecasts are more uncertain. The proposed 0.5 percentage point hike in the Medicare levy to fund the National Disability Insurance Scheme has been scrapped. Baby boomers also benefited in the budget. The budget has allocated funding for 14,000 extra home care package places to help the elderly stay in their own homes for longer. Other measures were introduced to ease financial strain in retirement. Overall, consumers will be marginally better off as a result of the budget, although it will be some time before the full benefits are felt.
Businesses were not front and centre in this year's budget, but there were still some positives for them. Small businesses, they will continue to get that instant asset write-off until 30th of June 2019. So businesses with annual turnover less than 10 million can still fully depreciate assets worth up to 20k. The government is still hopeful in pushing through the company tax cut to 25% for all companies. That was announced in the 2016-17 budget a couple of years ago. So far, only companies with turnover of up to 50 million will receive that tax cut over a number of years. For larger companies, a tax cut for them, that still faces a big hurdle with the Senate. Some of the other big winners in this year's budget were science, research and technology. They've got some extra funding, and it was great news that infrastructure has continued to be a big feature. That's something that we all benefit in. It supports economic activity, jobs and productivity over the longer run. $24.5 billion has been allocated to new road and rail projects. And public infrastructure spending, that's been a big benefit to the Australian economy in recent times, and we expect that's going to continue to be one of the key drivers of economic growth in coming years.